Welcome to Get Solutions. This is your Lokesh. So in previous session and previous sessions we have already discussed the various concepts and various illustrations on preparation of the consolidated financial statement. Okay, so you know very well that each and every business organization, it is very necessary to record the each and every transactions to know the financial position and to know the net profit or net loss, right? So the business organization will be going to prepare the different types of financial statement, that is cash flow statement, that is in order to know the cash inflows and cash outflows, and preparing the, that is the income statement, that is to know the operating expenses and non-operating expenses and gross profit and net profit and loss, right? Okay, so and also the companies will be going to prepare the balance sheet, that is financial statement, right, to know the financial position of the business organization, how well the business organization will be going to provide the services, and what is the present condition of the business organization and all. Okay, so in previous session we have already discussed the regarding the preparation of the consolidated financial statement. That is, in consolidated financial statement you have the concept, that is holding company and subsidiary company. When both the company's assets and liabilities get together and represent the assets and liabilities of both the companies in a single entity statement or as a single entity in a single statement, then it is called as consolidated financial statement. So in this module, that is module 4, we are going to discuss consolidated income statement. So what is this income statement or income and expense statement? So this statement is prepared by the most of the business organization to know the net profit or net loss and gross profit or gross loss, or operating expenses and non-operating expenses, and operating incomes and non-operating incomes, and like that. So this consolidated income statement is also follows the same principle which is similar to consolidated financial statement. See, the consolidated income statement present the financial performance of the group of the companies. So group of the companies in the sense both holding company and subsidiary company. So which represents the financial performance of the two companies, that is holding company and subsidiary company, in one single entity or in one single statement. So when operating expenses, non-operating expenses related to gross profit and net profit, it will be going to represent in a single statement, then it is called as the consolidated income statement. So in order to prepare the consolidated income statement by the business organization, that is holding company including of a subsidiary company, it will be going to follow some of the rules and regulations. Let's see the principles while preparing the consolidated income statement that is followed by the holding company. Okay, let's take down the principles. So these are some of the principles that we have to remember in consolidated income statement. Okay, see, add together the revenues and expenses of the parent and subsidiary company in preparation of the consolidated income statement. So to prepare the consolidated income statement, we have to consider the various revenue part and expenses part. That is the revenue which is generated from the sales. So that we have to consider in the income statement, that we have to consider related to both parent and subsidiary company. We have to take into consideration the revenues which is related to both parent and subsidiary company, and also we have to consider the expenses too. Okay, so that is the first principle. Add together revenues and expenses which are ultimately related to the parent company and subsidiary company while preparing the consolidated income statement, in order to know the gross profit or net profit together. Okay, so second one, eliminate the intra-group sales and purchases. So this sales and purchases related to debtors and creditors in one company, and so this intra-company adjustment and inter-company transactions which is affect for the debtors in one company and creditors for the another company. So similarly, bills payable and bills receivable. So we are going to eliminate the intra-group sales and purchases. Okay, that is intercompany transactions while preparing the consolidated income statement. So consolidated financial statement alli bills payable due and debtors due to the holding company idan ಏನು ಮಾಡ್ತಿದೀವಿ ನಾವು deduct ಮಾಡ್ತೀವಿ. That is, we have to eliminate from the both the companies. So that is the case, eliminate the intra group transactions which is related to sales and purchases. Okay, so yavaga sales and purchases baruto aga bills receivable, bills payable and debtors and creditors automatically enter ಆಗ್ತಾರೆ. Therefore, the second principle stated that under consolidated income statement we have to eliminate the intra group sales and purchases. Okay, next third one, eliminate the unrealized profit. You know that this unrealized profit treatment under consolidated financial statement. Okay, see, in this elimination of unrealized profit, ultimately this unrealized profit related to the inventory that is held in the closing inventory related to intercompany trading. Okay, so therefore we are going to deduct under inventory, that is under the closing stock of the asset side. So therefore the condition stated that elimination of the unrealized profit, so this treatment which is similar to treatment under the consolidated financial statement, and also under income statement is also the same treatment. For this unrealized profit, this is related to that is closing inventory. Okay, so next calculate the profits attributable to the non-controlling interest. So after this elimination of the unrealized profit which is related to closing inventory, then we are going to calculate the profits and the earnings related to the non-controlling interest, that is non-controlling shareholders. You know who are the non-controlling shareholders, that is minority shareholders, and who are the majority shareholders. So after treatment of unrealized profit under consolidated income statement, we are going to calculate the profits and revenues or earnings which is ultimately related to minority shareholders in order to distribute, in order to identify the ownership of the minority shareholders in the subsidiary company. Okay, next, after identifying the non-controlling shareholders based on the profits, then we are going to see after the net profit for the year, then it must be split between the equity shareholders and the non-controlling interest shareholders. So after calculating the net profit for the year, that is for the entire year, then we have to divide that net profit to the equity shareholders and for the non-controlling shareholders in order to reflect the ownership between the equity shareholders of the company and the minority shareholders, that is non-controlling shareholders of the company. See, that is the condition. After calculating the net profit for the year, then we have to split this net profit between the amount available, that is amount related to the equity shareholders of the company in group, and minority shareholders, that is non-controlling interest to the non-controlling shareholders, that is minority shareholders of the company, in order to reflect the ownership. So ownership ಯಾವ ರೇಷಿಯೋನಲ್ಲಿ ಯಾವ ಥರ ಇದೆ ಸಬ್ಸಿಡರಿ ಕಂಪನಿನಲ್ಲಿ ನಾವು ತಿಳ್ಕೋಬೇಕಂತ ಹೇಳಿದ್ರೆ, we have to split the profit between the equity shareholders of the company and also the minority shareholders of the company. So these are the basic principles in preparation of the consolidated income statement. So according to the principle that is related to non-controlling shareholders, that is to minority shareholders, we have to split the net profit for the year, that is between the equity holders and the non-controlling holders. Okay, so in this consolidated income statement, the portion of profit which is related to non-controlling interest is calculated based on the, see, the percentage of non-controlling interest is multiplied with the total subsidiary company profit after tax. So to compute the portion of profit which is related to non-controlling interest under consolidated income statement, we have to compute as follows: percentage of non-controlling interest is multiplied with the total subsidiary company profit after tax. Then we will get the total profit which is related to minority shareholders. Now let's take down the example problem for that is computation of non-controlling interest portion while income statement is given. Okay, so this is the example problem. See, the income statement for P and S for the year ended 31st August 2014 is given. So according to 31st August 2014 are shown below. So P Limited acquired 75% of the ordinary share capital of S Limited, which means P Limited becomes the holding company and S Limited becomes the subsidiary company, because P Limited acquired 75% shares in S Limited. So the remaining 25% share will be related to non-controlling interest, that is related to minority shareholders, that is minority portion or non-controlling interest portion, that is 25%. So this 75% is the majority portion which is invested by the P Limited in S Limited several years ago. Okay, so the income statement is given related to P Limited and S Limited. So based on this we have to prepare the consolidated income statement for the year 31st August 2014. Okay, so this is the actual format to prepare the consolidated income statement for the year 31st August 2014, which is similar to consolidated financial statement. Okay, see particulars. So first ಏನು ಕೊಟ್ಟಿದ್ದಾರೆ, that is revenue, right? So revenue. So P Limited and S Limited. So amount will be given in thousand. So therefore you have to take here. So nodi revenue estide P Limited do 1200 and S Limited 400. Total revenue 1600. Okay, so revenue computation ಮಾಡಿದೀವಿ. Next cost of sale. So cost of sale in the sense, so take it as a less. Okay, less. So this is minus value, right? So therefore you have to take here less cost of sale. So ನೀವು ಇದೇ ಥರ ತಗೊಳ್ತೀರ ಅಂತ ಹೇಳಿದ್ರೆ ನೋ ಇಶ್ಯೂಸ್. ಸೊ ಈಸಿಯಾಗಿ ಕನ್ಫ್ಯೂಷನ್ಸ್ ಇಲ್ದಿರೋ ಮಾಡ್ಕೊಳ್ಬೇಕು ಅಂತ ಹೇಳಿದ್ರೆ ಲೆಸ್ ಅಂತ ತಗೊಳ್ಳಿ. ಸೊ ಕಾಸ್ಟ್ ಆಫ್ ಸೇಲ್ಸ್. ಸಿ ದ ಅಮೌಂಟ್ಸ್ ರಿಲೇಟೆಡ್ ಟು ಕಾಸ್ಟ್ ಆಫ್ ಸೇಲ್ಸ್ ಆಫ್ P Limited and S Limited. ಸಿ P Limited and S Limited, so 1080 and 360. So total cost of sales 8 plus 6 14,440 is the total cost of sales. Now after deducting this, see 1600 minus 1440, you will get 160 is the gross profit of the both the company. This is consolidated gross profit. So after this you have to deduct administrative expenses. See, less administrative expenses. What are the administrative expenses of P Limited and S Limited? See 75 and 30. So total 105. So you will get 55 is the profit before tax. So profit before tax, that is consolidated profit before tax is 55,000. Okay, so next you have to deduct tax. So see the tax amount, that is P Limited and S Limited paid tax 15 and 6. So 15,000 and 6,000. You will get 21,000 is the total tax amount paid by the P Limited and S Limited. Then profit after tax you will get 34,000. So this is the total profit, that is consolidated profit after tax. So according to the principle, after calculating the total profit after tax for the year 31st August 2014 or for the every year or for the each year, then we have to split this total profit to the equity shareholders in group and for the non-controlling shareholders, that is to the minority shareholders. So according to the formula, you know how to compute the non-controlling portion, right? See, the non-controlling portion of profit is calculated based on the percentage of non-controlling interest into total profit of a subsidiary company after tax. See, what is the percentage of non-controlling interest here? See, 75% is the majority interest and 25% of the, that is 25% is the non-controlling interest in the subsidiary company. So therefore 25% is the non-controlling interest into total profit of the subsidiary company. So what is the total profit of the subsidiary company only after tax? See, P Limited is the holding company and S Limited is the subsidiary company. We are going to takes into consideration, that is total profit of the subsidiary company after tax. So profit after tax ಎರಡು ಕಂಪನಿ ಇದು ಕೊಟ್ಟಿದ್ದಾರೆ. So what is the total profit of the subsidiary company after tax? That is 4,000. That is 4,000. So 25% into 4, you will get 1,000 is the non-controlling portion. So according to this, you have to split the total profit, that is 34, that is in 1000, to non-controlling shareholders, that is 1000, and the remaining will be to the group, that is group profit after tax. So total 34,000 ಅಲ್ಲಿ 1,000 ಏನು ಪೋರ್ಷನ್ ಇದೆಯೋ ಅದು ನಾನ್ ಕಂಟ್ರೋಲಿಂಗ್ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ಗೆ ಸೇರಬೇಕು ಅಂಡ್ 33,000 ರಿಲೇಟೆಡ್ ಟು ಗ್ರೂಪ್ ಪ್ರಾಫಿಟ್ ಆಫ್ಟರ್ ಟ್ಯಾಕ್ಸ್. ಓಕೆ, ಸೊ ಜಸ್ಟ್ ಕಾನ್ಸೆಪ್ಟ್ನ ಅರ್ಥ ಮಾಡ್ಕೊಳ್ಳಿ, ಇದರಲ್ಲಿ ಪ್ರಾಬ್ಲಮ್ಸ್ ಏನೂ ಕೇಳೋದಿಲ್ಲ ನಿಮಗೆ. ಸೊ ಯು ವಿಲ್ ಗೆಟ್ ದ ಪ್ರಾಬ್ಲಮ್ಸ್ ಅಂಡರ್ ದಿಸ್ ಮಾಡ್ಯೂಲ್ ಬೇಸ್ಡ್ ಆನ್ ದಿ ಕ್ಯಾಶ್ ಫ್ಲೋ ಸ್ಟೇಟ್ಮೆಂಟ್. ಸೊ ನೆಕ್ಸ್ಟ್ ಸೆಷನ್ಸಲ್ಲಿ ನಾವು ಕ್ಯಾಶ್ ಫ್ಲೋ ಸ್ಟೇಟ್ಮೆಂಟಲ್ಲಿ ಯಾವ ಥರ ಪ್ರಾಬ್ಲಮ್ಸ್ ಮಾಡೋದು ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ತಿಳಿಯೋಣ. ಓಕೆ, ಸೊ ನೆಕ್ಸ್ಟ್ ವಿ ಹ್ಯಾವ್ ದ ಅದರ್ ಥಿಯರಿಟಿಕಲ್ ಕಾನ್ಸೆಪ್ಟ್ಸ್. So next, impact of group financial statement at the point of acquisition. So under this concept, we are going to study about how that acquisition process will be impact on the financial statement. So ಯಾವ ಥರ acquisition ಸಂದರ್ಭದಲ್ಲಿ ಆ ಒಂದು ಪ್ರೋಸೆಸ್ ಬಂದ್ಬಿಟ್ಟು ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ಗೆ ಅಫೆಕ್ಟ್ ಆಗುತ್ತಾ ಇಲ್ಲ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಈ ಕಾನ್ಸೆಪ್ಟಲ್ಲಿ ನಾವು ಸ್ಟಡಿ ಮಾಡ್ತೀವಿ. ಓಕೆ, ಸೊ ದ ಬಿಸ್ನೆಸ್, ದಟ್ ಈಸ್ ದ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಶೋಸ್ ದಿ ಅಸೆಟ್ಸ್ ಅಂಡ್ ಲಯಬಿಲಿಟೀಸ್ ಆಫ್ ದಿ ಕಂಪನಿ. ಸೊ ಯು ನೋ ವೆರಿ ವೆಲ್. So according to the schedule 4, we are going to prepare the balance sheet. That is under consolidated financial statement and consolidated balance sheet, we are going to show the and represents the assets and liabilities of the both the company, that is holding company and subsidiary company. So in this income statement also, we are going to represent the assets and liabilities of the both the company, so that you know that the balance sheet shows the assets and liabilities of the company. Okay, see, I have already given the assignment related to calculation of the net worth, that is owner's equity. So first we have to identify and calculate the assets, and then we are going to identify the liabilities. Then assets minus liability, you will get the total net worth. So it indicates the owner's equity. Okay, that is ownership equity. Okay, so observe, in acquisition process, that holding company acquire the shares in subsidiary company. So during this process, for the first time, that is first time when the company acquire the shares in subsidiary company, then definitely this acquisition process impact and affect on the balance sheet, but not on the income statement. Why means, because that acquisition amount must be added to the assets. That asset must be represented in the balance sheet. So therefore the acquisition process will be affect on the balance sheet directly, but not on the income statement. So that is the case. See, when the business is first acquire the subsidiary company, then the impact is on the balance sheet, because the price of the acquisition amount we have to add it to the assets. So this assets must be represented in the balance sheet. So therefore it will be affect on the balance sheet of the business organization, but not on the income statement. ಓಕೆ, ಸೊ ಈ ಕಾನ್ಸೆಪ್ಟು ನಿಮಗೆ 2 ಮಾರ್ಕ್ಸ್ಗೆ ಕೇಳೋ ಚಾನ್ಸಸ್ ಇರುತ್ತೆ. ದಟ್ ಈಸ್ ಇಂಪ್ಯಾಕ್ಟ್ ಆಫ್ ಗ್ರೂಪ್ ಫೈನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಅಟ್ ದಿ ಪಾಯಿಂಟ್ ಆಫ್ ಅಕ್ವಿಜಿಷನ್. ಸೊ ಅಕ್ವಿಜಿಷನ್ ಸಂದರ್ಭದಲ್ಲಿ ಯಾವುದಕ್ಕೆ ಎಫೆಕ್ಟ್ ಆಗುತ್ತೆ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು. ಓಕೆ, ಇಫ್ ದೇ ಆಸ್ಕ್ಡ್ ಫಾರ್ ದ 2 ಮಾರ್ಕ್ಸ್, ಜಸ್ಟ್ ರೈಟ್ ಡೌನ್ ದಿಸ್. ಓಕೆ, ಅಂಡ್ ದಿ ನೆಕ್ಸ್ಟ್ ಕಾನ್ಸೆಪ್ಟ್, ದಿ ಟ್ರೀಟ್ಮೆಂಟ್ ಆಫ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಇನ್ ಅಸೋಸಿಯೇಟ್ ಇನ್ ಕನ್ಸಾಲಿಡೇಟೆಡ್ ಫೈನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್. ಸೊ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಇನ್ ಅಸೋಸಿಯೇಟ್ನ ಯಾವ ಥರ ಕನ್ಸಾಲಿಡೇಟೆಡ್ ಫೈನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟಲ್ಲಿ ನಾವು ಟ್ರೀಟ್ ಮಾಡ್ತೀವಿ ಅಂತ. ಓಕೆ, ಸೊ ಯು ನೋ ದ ಡಿಫ್ರೆನ್ಸ್ ಬಿಟ್ವೀನ್ ದಿ ಸಬ್ಸಿಡರಿ ಕಂಪನಿ ಆ್ಯಂಡ್ associate company. That is when one company invest more than 50%. ಸೊ ಯಾವ ಕಂಪನಿನಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡಿರ್ತಾರೋ ಆ ಕಂಪನಿ ಬಂದ್ಬಿಟ್ಟು ಸಬ್ಸಿಡರಿ ಕಂಪನಿ ಆಗಿರುತ್ತೆ. ದಟ್ ಮೀನ್ಸ್ 50%ಗಿಂತ ಜಾಸ್ತಿ ಶೇರ್ಸ್ನ ತಗೊಂಡಿರಬೇಕು ಬೇರೊಂದು ಕಂಪನಿ, ಅಥವಾ 50%ಗಿಂತ ಜಾಸ್ತಿ ಶೇರ್ಸಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡಿರಬೇಕು. ಅಂಡ್ ಅಸೋಸಿಯೇಟ್ ಇನ್ ದ ಸೆನ್ಸ್ ವೆನ್ ಒನ್ ಕಂಪನಿ ಇನ್ವೆಸ್ಟ್ ಮೋರ್ ದ್ಯಾನ್ 20% ಆ್ಯಂಡ್ ಲೆಸ್ ದ್ಯಾನ್ 50% ಶೇರ್ಸ್ ನಾ ಇನ್ವೆಸ್ಟ್ ಏನಾದರೂ ಮಾಡಿದರೆ ಆ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡಿರೋ ಕಂಪನಿನ ನಾವು ಅಸೋಸಿಯೇಟ್ ಕಂಪನಿ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಕರಿತೀವಿ. ಬಿಕಾಸ್ ದ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಇನ್ ಅನದರ್ ಕಂಪನಿ ಬೈ ಒನ್ ಕಂಪನಿ ಇಟ್ ಈಸ್ ಬಿಟ್ವೀನ್ 20% to 50%. ದೆನ್ ದಟ್ ಕಂಪನಿ ಪರ್ಟಿಕ್ಯುಲರ್ಲಿ ಕಾಲ್ಡ್ ಆಸ್ ಅಸೋಸಿಯೇಟ್ ಕಂಪನಿ ಫಾರ್ ದಿ ಇನ್ವೆಸ್ಟೆಡ್ ಕಂಪನಿ. ಸೊ ಇನ್ ಕೇಸ್ 50%ಗಿಂತ ಜಾಸ್ತಿ ಏನಾದರೂ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡಿದ್ರೆ ದಟ್ ಈಸ್ ಕಾಲ್ಡ್ ಆಸ್ ಸಬ್ಸಿಡರಿ ಕಂಪನಿ. ಸೊ ಹಿಯರ್ we are going to study about the treatment of the investment in the associate company regarding consolidated financial statement. See, this concept related to accounting standard 23, that is accounting for the investment in associates in consolidated financial statement. So according to this accounting standard we are going to study the objectives and scopes or applicability. See the objectives. Objective of this accounting standard 23 related to investment in the associate in consolidated financial statement in the sense, see, the objective of this standard is to set out the various principles and also in order to implement the various rules and regulations and procedures related to recognizing the effect of the investment in the associates on the financial position and operating results of a group. Okay, so this accounting standard 23 implement the rules and regulations and policies and procedures and principles which is related to the associate investment. So about this investment in the associate, it will be going to set out the rules and regulations, that is how to treat the investment in the financial position, that is financial statement. So that is the case, it set out the principles and procedures for the recognizing the effect of the investment, that is in order to identify whether the investment is the good investment or worthy investment, it is a positive or negative investment. So in order to identify that, the accounting standard 23 implement the rules and regulations to recognize the effect of the investment in the associate company, and also this ultimately effect on the financial position of the business organization and operating results of a group financial statement. So this is the major objective. The major objective is to implement this accounting standard in order to identify the effect of the investment in the associate. So how that investment will be affect the business organization, that is how the investment will be affect on the financial position of the business organization in group. So group in the sense including holding and subsidiary company. So that is the major objective. And come to the scope or applicability. So this standard specifically applicable or applied for the accounting for the investment. So investment ಅನ್ನೋ ಕಾನ್ಸೆಪ್ಟ್ ಬಂದರೆ ಈ ಅಕೌಂಟಿಂಗ್ ಸ್ಟ್ಯಾಂಡರ್ಡ್ ಪರ್ಟಿಕ್ಯುಲರ್ ಆಗಿ ಅಪ್ಲೈ ಆಗುತ್ತೆ. ಬಟ್ ದೆರ್ ಇಸ್ ಅ ಕಂಡೀಷನ್. ಸಿ, in associate in the preparation and presentation of the consolidated financial statement. So this accounting standard, that is investment in the associate, that is investment in the associate in the consolidated financial statement is applicable for the investment in the associate and also in preparation and presentation of the financial statement. So preparation and presentation of the financial statement in the sense the company will be going to prepare and present the financial statement by group by adding the all incomes and expenses or assets and liabilities. Then only this accounting standard 23 applicable. Okay, so this standard does not applicable and does not deal with the accounting for the investment when in associate in the preparation and presentation of the separate financial statement. So separate agi enadru financial statement enadru prepare madare, then this accounting standard for the investment in the associate, that is consolidated financial statement, applicable agodilla. ಸೊ ಅಪ್ಲಿಕಬಿಲಿಟಿ ಯಾವಾಗ ಗ್ರೂಪಲ್ಲಿ ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಆ್ಯಂಡ್ ಫಿನಾನ್ಷಿಯಲ್ ಇನ್ಕಮ್ ಸ್ಟೇಟ್ಮೆಂಟ್ನ ಪ್ರಿಪೇರ್ ಮಾಡ್ತಾರೋ ಆಗ ಈ ಸ್ಟ್ಯಾಂಡರ್ಡ್ನ ಅಪ್ಲೈ ಮಾಡಿಕೊಂಡು ರೂಲ್ಸ್ ಆ್ಯಂಡ್ ರೆಗ್ಯುಲೇಷನ್ಸ್ನ ಫಾಲೋ ಮಾಡಿ ಪ್ರಿಪೇರ್ ಮಾಡಬೇಕು. ಸೊ ವೆನ್ ದ ಕಂಪನಿ ಡಸ್ ನಾಟ್ ಪ್ರಿಪೇರ್ ದಿ ಕನ್ಸಾಲಿಡೇಟೆಡ್ ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಆರ್ ಗ್ರೂಪ್ ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್, ದೆನ್ ದಿಸ್ standard will not applicable for that business organization. So this is the scope or applicability according to accounting standard 23. And take down the next treatment of the investment, that is according to accounting standard 23. See, where the investment is initially recorded at cost, then this method will be ultimately called as the equity method. So ಎಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಇನ್ ಅಸೋಸಿಯೇಟ್ ಕಾಸ್ಟ್ಗೆ ರೆಕಾರ್ಡ್ ಮಾಡ್ತಾರೆ, ದಟ್ ಈಸ್ ಕಾಸ್ಟ್ ವ್ಯಾಲ್ಯೂ ಬೇಸಿಸ್ ಮೇಲೆ ರೆಕಾರ್ಡ್ ಮಾಡ್ತಾರೆ. ಸೊ ಆಗ ನಾವು ಅದನ್ನು ಈಕ್ವಿಟಿ ಮೆಥಡ್ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ನಾವು ಕರಿತೀವಿ. ದಟ್ ಈಸ್ ಅಕಾರ್ಡಿಂಗ್ ಟು ಅಕೌಂಟಿಂಗ್ ಸ್ಟ್ಯಾಂಡರ್ಡ್ 23. ಸೊ ರಿಲೇಟೆಡ್ ಟು ದಿಸ್ ಈಕ್ವಿಟಿ ಮೆಥಡ್ ದೆರ್ ಈಸ್ ಎ exceptional cases and inclusive cases. See, an investment in an associate should be accounted for consolidated financial statement. That while preparing the consolidated financial statement, we have to consider this certain information and condition and adjustment related to investment in the associate. But there is a condition under the equity method, except when following two criterias ನಾವು ಕನ್ಸಿಡರ್ ಮಾಡಬಾರ್ದು. ಸಿ, ಯಾವ್ಯಾವ ಕ್ರೈಟೀರಿಯಾಸ್ನಲ್ಲಿ ನಾವು ಎಕ್ಸೆಪ್ಷನಲ್ ಕೇಸಸ್ ಅಂತ ಟ್ರೀಟ್ ಮಾಡ್ತೀವಿ ಅಂಡರ್ investment in the associate, in the sense, see, the investment is acquired and held exclusively with the view to subsequent disposal in near future. See, holding company decided to investment in the another company, that is more than 20% and but less than the 50%, then that company will be called as associate company with the intention future ಅಲ್ಲಿ ನಾನು ಡಿಸ್ಪೋಸಲ್ ಮಾಡಬಹುದು ಅಥವಾ ಸೇಲ್ ಮಾಡಬಹುದು ಅಂತ ಹೇಳಿಬಿಟ್ಟು. ಸೊ ಆ ಒಂದು ಸಿಚುವೇಶನಲ್ಲಿ, in that situation we are not going to consider as a investment in associate while preparing the consolidated financial statement. That is the case. See, the investment is acquired and held exclusively with the view to subsequent disposal in near future. So future ಅಲ್ಲಿ ಏನಾದರೂ ಡಿಸ್ಪೋಸಲ್ ಮಾಡ್ತೀವಿ ಅಂತ ಇಂಟೆನ್ಷನ್ ಅಲ್ಲಿ ಏನಾದರೂ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡಿದರೆ ಆಗ ನಾವು ಆ ಒಂದು ಅಮೌಂಟ್ನ ನಾವು ಕನ್ಸಾಲಿಡೇಟೆಡ್ ಫೈನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಅಲ್ಲಿ ತಗೋಬಾರ್ದು, ಎಕ್ಸಂಪ್ಷನ್ ಕೊಡಬೇಕು, ಅಂದರೆ ಎಕ್ಸೆಪ್ಷನಲ್ ಕೇಸಸ್. ಸೊ ದಟ್ ಈಸ್ ದ ಕ್ರೈಟೀರಿಯಾ. ಓಕೆ, ಅದನ್ನು ತಗೋಬಾರ್ದು ವೈಲ್ ಪ್ರಿಪೇರಿಂಗ್ ದಿ ಕನ್ಸಾಲಿಡೇಟೆಡ್ ಫೈನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್. ಅಂಡ್ ದಿ ಅನದರ್ ಕ್ರೈಟೀರಿಯಾ, ಸಿ, ವೆನ್ ವಿ ಆರ್ ಗೋಯಿಂಗ್ ಟು accept the condition, the associates operate under the severe long term restrictions that significantly impair its ability to transfer the funds to the investors. See, when the company is operate under the heavy responsible and various rules and regulations, then it is a difficulty to run the business organization and distribute the funds to the investors. So even single amount distribute ಮಾಡಬೇಕಂದ್ರೆ ಇನ್ವೆಸ್ಟರ್ಸ್ಗೆ there is a lot of rules and regulations ಅಂತ ಹೇಳಿದ್ರೆ the company position will be not good. So the associate, that is also the associate company operate under the severe long term restrictions. So ಯಾವ ಒಂದು ಅಸೋಸಿಯೇಟ್ ಕಂಪನಿ ಸಿವಿಯರ್ ರಿಸ್ಟ್ರಿಕ್ಷನ್ಸ್ ಅಲ್ಲಿ ಆಪರೇಟ್ ಆಗಿರುತ್ತೋ ಆಗ then it is difficulty to distribute the funds to the investors. ಸೊ ಈ ಒಂದು ಸಿಚುವೇಶನ್ ಅಲ್ಲೂ ಸಹ ನಾವು ಎಕ್ಸೆಪ್ಷನ್ ಕ್ರೈಟೀರಿಯಾ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡಬಹುದು. ಸೊ ದೀಸ್ ಆರ್ ದಿ ಟ್ರೀಟ್ಮೆಂಟ್ ಆಫ್ ದಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್. ಸೊ ಯಾವ ಒಂದು ಸಿಚುವೇಶನ್ಸ್ ಅಲ್ಲಿ ಈ ಕ್ರೈಟೀರಿಯಾಸ್ನ ನಾವು ಇಗ್ನೋರ್ ಮಾಡಬಹುದು, ದಟ್ ಈಸ್ ಅಂಡರ್ ಈಕ್ವಿಟಿ ಮೆಥಡ್, ದಟ್ ಈಸ್ ವೈಲ್ ಪ್ರಿಪೇರಿಂಗ್ ದಿ ಕನ್ಸಾಲಿಡೇಟೆಡ್ ಫೈನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಅಂಡರ್ ಈಕ್ವಿಟಿ ಮೆಥಡ್. ಸೊ ಈಕ್ವಿಟಿ ಮೆಥಡ್ ಅಲ್ಲಿ ಫೈನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ನ ಪ್ರಿಪೇರ್ ಮಾಡಬೇಕಂತಾದರೆ ಈ ಒಂದು ಸಿಚುವೇಶನ್ಸ್ನ ನಾವು ಎಕ್ಸೆಪ್ಷನ್ಸ್ ಅಥವಾ ಈ ಒಂದು ಸಿಚುವೇಶನ್ಸ್ನ ಇಗ್ನೋರ್ ಮಾಡಬಹುದು. ಓಕೆ, ಸೊ ನೆಕ್ಸ್ಟ್ ಟೇಕ್ ಡೌನ್ ದ ಡಿಫರೆನ್ಸಸ್ ಬಿಟ್ವೀನ್ ದಿ ಅಕ್ವಿಸಿಷನ್ ಅಂಡ್ ಈಕ್ವಿಟಿ ಮೆಥಡ್. Okay, that is compare and contrast the acquisition and equity method. So observe here, acquisition and equity method, that is both the method will give the same net income, but acquisition method will gives the higher value of asset, that is higher rate value of asset compared to the equity method. So adanne illi baridini. See, both acquisition method and equity method will report the same net income under the both the method, but the acquisition method will gives the or report the higher value of asset when compared to the equity method. So here see, observe, hence the return on asset, so ROA in the sense return on asset would be lower under acquisition method. So yavaga acquisition method higher value of asset na report ಮಾಡುತ್ತೆ compared to equity method, then the return on asset will be less under the acquisition method compared to the equity method. That return on asset is calculated based on the net income divided by total assets. So ಈ ರಿಟರ್ನ್ ಆನ್ ಅಸೆಟ್ ಯಾವ ಥರ ಕ್ಯಾಲ್ಕುಲೇಷನ್ ಮಾಡೋದು ಅಂತ ಹೇಳಿದ್ರೆ, ಸಿ ರಿಟರ್ನ್ ಆನ್ ಅಸೆಟ್ ಇಸ್ ಕ್ಯಾಲ್ಕುಲೇಟೆಡ್ ಬೇಸ್ಡ್ ಆನ್ ದಿ ನೆಟ್ ಇನ್ಕಮ್ ಅಂಡ್ ಅಸೆಟ್ಸ್. ಸೊ return on asset shows the relationship between the net income of the business organization and total assets. So when acquisition method will report the higher value of asset than the equity method, then the value, that is the return on asset value, would be less under the acquisition method, that is compared to the equity method. That return on asset will be calculated based on the net income and asset. See the link between this theory and this formula. Okay, so and see the relationship between this formula and equity method and this formula with the acquisition method similarly. Okay, see return on asset calculated based on the net income divided by asset. Equity method, see equity method includes extra earnings. You know that return on asset is calculated based on the net income divided by asset. But equity method alli ಏನು ಹೇಳ್ತಿದ್ದಾನೆ, it just includes the extra earnings. So therefore the equity method shows the relationship between the calculation of return on asset under equity method. See, calculation of return on asset under equity method based on the net income plus some extra earnings divided by asset. So now completely the equity method shows the relationship between the net income including extra earnings and also assets. So this is the actual formula to compute the equity method. And similarly, see the acquisition method, it includes both extra earnings and balance sheet items, which means under acquisition method we are going to calculate the return on asset under acquisition method, that is based on the, you know, the net, that is return on asset will be calculated based on the net income divided by assets. But under acquisition method it includes extra earnings and balance sheet item. So therefore plus extra earnings plus balance sheet item in the sense that is extra assets. So based on this we are going to calculate the return on asset under acquisition method. See and observe, under acquisition method the denominator will be higher, therefore under acquisition method the return on asset will be less when compared to equity method. So this is the actual concept related to equity method and acquisition method. So if they asked for 2 marks, just write down this concept and with the formula. Okay. And the next concept, that is treatment of investment in joint venture in consolidated financial statement. Okay, so you know that what is joint venture. So joint venture in the sense jointly controlled by the two or more parties. See, the definition of this joint venture, it is a contractual obligation or it is a contractual arrangement where by two or more parties undertaken an economic entity or an economic business organization activity subjected to joint control. So yavaga two or more parties single economic entity na undertake ಮಾಡಿಕೊಂಡು ಆಪರೇಷನ್ಸ್ ನ ಜಾಯಿಂಟ್ಲಿ ಕಂಟ್ರೋಲ್ ಮಾಡ್ತಾರೋ ಆ ಒಂದು ಸಿಚುವೇಶನ್ ನ ನಾವು ಜಾಯಿಂಟ್ ವೆಂಚರ್ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಕರಿತೀವಿ. ಸೊ ಜಾಯಿಂಟ್ ವೆಂಚರ್ ಇಸ್ ನಥಿಂಗ್ ಬಟ್ ಜಾಯಿಂಟ್ಲಿ ಕಂಟ್ರೋಲ್ಡ್ ಬೈ ದಿ ಟೂ ಆರ್ ಮೋರ್ ಪಾರ್ಟೀಸ್. That is jointly undertaken the business organization, jointly undertaken the economic entity. The definition of joint venture, it is a contractual obligation or arrangement where the two or more parties jointly undertaken the economic entity, and also by undertaking they are going to control jointly the business organization. So business operations na jointly control ಮಾಡೋದಕ್ಕೆ, operations na jointly manage ಮಾಡೋದಕ್ಕೆ joint venture ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ನಾವು ಕರಿತೀವಿ. Okay, so this is the actual definition. See, this standard is a mandatory in the nature where an enterprise or business organization prepares and present the consolidated financial statement. That is, the investment in joint venture in consolidated financial statement, it is based on the accounting standard 27. Okay, so as per the accounting standard 27, that is investment in joint venture in consolidated financial statement, this standard is mandatory in the nature where an business organization or an economic entity or the business firm prepares and present the consolidated financial statement. So ಯಾವ ಒಂದು ಸಿಚುವೇಶನ್ಸ್ ಅಲ್ಲಿ ಯಾವುದೇ ಒಂದು ಬಿಸ್ನೆಸ್ ಆರ್ಗನೈಸೇಷನ್ ಕನ್ಸಾಲಿಡೇಟೆಡ್ ಫೈನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ನ ಪ್ರಿಪೇರ್ ಮಾಡ್ತಿದೆ ಅಂತ ಹೇಳಿದ್ರೆ ಅಕೌಂಟಿಂಗ್ ಸ್ಟ್ಯಾಂಡರ್ಡ್ 27 ರೂಲ್ಸ್ ಅಂಡ್ ರೆಗ್ಯುಲೇಷನ್ಸ್ ನ ಅಡಾಪ್ಟ್ ಮಾಡ್ಕೋಬೇಕು. ದ ಮೇಜರ್ ಆಬ್ಜೆಕ್ಟಿವ್ ಆಫ್ ದಿಸ್ ಅಕೌಂಟಿಂಗ್ ಸ್ಟ್ಯಾಂಡರ್ಡ್ 27, ಸಿ ದಿಸ್ ಅಕೌಂಟಿಂಗ್ ಸ್ಟ್ಯಾಂಡರ್ಡ್ 27 set out the principles, rules, regulations and procedures for accounting for an interest in the joint venture and reporting of a joint venture assets and liabilities, incomes and expenses in the financial statement of the venture and investment. So this accounting standard 27 speaks about the joint venture in the consolidated financial statement that you know. The major objective of this accounting standard 27 set out the rules and regulations and implement the rules and regulation in order to prepare and present the financial statement by representing the joint venture assets and liabilities and incomes and expenses in the consolidated financial statement. See, that is the case. It set out the rules and regulations and principles and procedures for the accounting for the interest in joint venture. You know that joint venture, that is jointly controlled operations by the two or more parties. So when that condition, that criteria satisfies, then accounting standard 27 is applicable. Okay, so these principles and procedures will helpful to represent the assets and liabilities, incomes and expenses as per the accounting standard 27 related to joint venture. This is the major objective. And see the applicability and scope of this accounting standard 27. The standard should be applicable and applied in accounting for the interest in the joint venture. So yavaga joint venture concept baruto aga definitely this accounting standard 27 must be applicable. So this standard should be applied in the accounting for the interest in the joint venture where the two or more parties jointly control the operation, jointly manage the operation. Then this accounting standard is must and should be applicable. And also this accounting standard 27 is applicable for reporting the joint venture assets and liabilities, incomes and expenses in the financial statement of the venture and the investment. So it is same or similar to the objectives. Okay, so these are the information related to joint venture. Okay, so definitions na bariri, first definition na bari, matte objectives na bariri, next scope na bariri. Next class alli cash flow statement ಬಗ್ಗೆ ನಾವು ಡಿಸ್ಕಸ್ ಮಾಡೋಣ. Okay, if you still not yet subscribe to this YouTube channel, so please subscribe today only so that you will get my latest videos on this module. So thanks for watching once again.